Welcome to the Tidecrest 3's for February 2026. Each month, we spotlight 3 numbers impacting the capital markets, 3 news stories driving investor sentiment, all in 3 minutes. Let's dive in. $7.7 trillion money market assets. Assets held in U.S. money market funds have climbed to approximately $7.7 trillion as investors continue to favor flexibility amid uncertainty. Why it matters. Money market balances have risen steadily from under $7 trillion a year ago, reaching historically elevated levels now. This reflects strong demand for liquidity and attractive short-term yields. While this cash provides flexibility and potential buying power, it also signals caution as significant capital remains on the sidelines rather than moving into longer-term investments. 101.6, Small Business Employment Index. The employment index fell nearly 1 point last month to 101.6, reversing part of December's surge but staying above historical and 2025 averages. Why it matters. Plans to create new jobs slipped and hiring activity softened, with fewer unfilled positions and the lowest share of firms hiring since May 2020. Small businesses are typically early indicators of economic shifts, and reduced hiring plans suggest growing caution around demand, costs, and financing conditions. 4.5%, personal savings rate. U.S. households are saving about 4.5% of disposable income. Why it matters. That level's well below pre-pandemic norms, when the savings rate typically ranged between 6 and 8%, and far below the double-digit levels seen during the pandemic. A lower savings rate suggests households have less financial cushion and are relying more on current income and credit to support spending. Bitcoin dips to lows not seen since October 2024. Bitcoin recently slid below 64,000, its weakest price since October 2024, amid a steep sell-off that erased a significant portion of last year's gains from record highs around 126,000 in October of 2025. Why it matters. Weakness at these levels shows growing nervousness among investors, with fewer rushing to buy the dip and more stepping back to see whether prices stabilize. Bitcoin often reflects broader risk appetite. And while Bitcoin does not drive the economy, its moves frequently mirror shifts in sentiment that can spill over into stocks and other risk assets. Consumer spending shows signs of fatigue. Recent retail sales data pointed to slowing discretionary spending, particularly among lower-income households, as higher prices and borrowing costs strain budgets. Why it matters. Consumer spending accounts for roughly 2/3 of the U.S. economic activity. Signs of fatigue suggest households are becoming more selective, which could pressure revenues in retail, travel, and other discretionary sectors. Investors are watching whether higher-income consumers can continue to support growth, or if softness begins to spread more broadly across the economy. AI investment expands beyond big tech. Capital spending tied to artificial intelligence is spreading beyond large tech firms into industrials, utilities, data centers, and energy infrastructure. Why it matters. Broader AI investment could support more balanced market leadership and reduce reliance on a small group of mega-cap stocks. Increased infrastructure spending may drive earnings growth across multiple sectors, improve productivity over time, and create longer-term opportunities beyond software and semiconductor companies alone. That's the Tidecrest 3's for February 2026. 3 numbers, 3 stories in 3 minutes. We'll be back next month to track what matters most. Thanks for watching.